Welcome back to Chartbusters on CNBC-TV18. Let's bring on board the next management for today. We have Ganesha Ecosphere's Yash Sharma, who is the director at the company, to talk to us about the outlook of the company going forward. Q3 was a bit of a turnaround quarter that came in, especially in terms of profitability for the company. Revenue was a bit muted. There were a few challenges that came in from the company due to some regulatory issues. What will that mean for the company going forward? We'll discuss all of that, as well as the outlook in FY27, as well as end of Q4 FY26. What's the expectation there? Thank you so much, Mr. Sharma, for joining us on the show. Let's start by talking about the regulatory issues. Those are the specific challenges, which is leading to a bit of a problem for the company in the last few quarters. Could you update us on what is the recent notifications that have come in here from the Ministry of Environment, Forest and Climate Change, and what does it mean for the company? Will it start easing off in Q4 and onwards?
Yeah, thanks. So, yes, the regulation to start using recycled content in all rigid applications is already there. What happened really last year is that on June 3, 2025, due to shortage in the capacity to produce food-grade recycled PET material was there. So the government came out with a draft notification saying that, okay, we understand there is a capacity shortfall, so you can carry forward the shortfall over the next 3 years. But what really happened as an aftermath of this draft notification is that the industry started reducing and started postponing their usage of recycled materials for the future. This really led to reduction in the volumes, reduction in the market size, and at the same time, a lot of capacity got added and got implemented in India. As of today, the draft notification has not been converted into a final notification, and we are still awaiting the final notification from the government side. It's very important to understand that the regulation is already there. It's already live. And as per our feedback and interaction, very soon we will be hearing the final notification from the government, which will be mandating the use of recycled content. And definitely for the next year, the target stays still the same and strong at 40% of recycled content.
Yash, this mandate, there's also a thing that is coming in that brands will face a 40% recycled content mandate, right? From FY27, I believe. Is that right?
That's right.
So then what does it mean in terms of visibility for you, long-term agreements? What are the talks that you're having with brands as well then?
So definitely we are in talks with all the global brands and as well as the national brands in India to supply high-quality food-grade RPD to them. A lot of long-term agreements are already under discussions. Everyone is just awaiting for the final notification to come out with the revised targets.
But then will you start seeing a growth? Sorry, because right now Q3 was muted. So in FY27, could we expect growth to come back?
Yeah, definitely. Definitely, we are expecting that from FY27 onwards, the industry should come to very good utilization levels because now there is ample capacity to meet the regulatory demand. And the brands will be starting to use the material in a very big volume way.
All right. Hi, Yash. Good to see you. And sometimes that happens, right? You brace yourself for a good time and unfortunately the regulation doesn't come through, which puts the business into a bit of a tailspin. Give me a couple of details. Your legacy business seems to have done pretty well in the last quarter. So tell me, what is the capacity utilization levels, both in the legacy business as well as the new business, the rPET business?
So in the legacy business, we are running at almost at north of 100% utilization levels. We are producing at the very optimum and maximum possible capacities, and even the sales are doing quite well.
Okay.
And offtake is also doing quite well. In terms of subsidiaries, we are currently at around 50 to 55%, which we are expecting to improve.
Okay. Improve to what level?
So going forward, I think immediate improvement we see around 70%. But going forward, I think in FY27, once the new year starts and the brands start to implement the 40% regulation, it will be much better.
Okay, that's the hope that you have out there. Got it. So you're saying that implementation, but is there any risk to that implementation FY27? And then there'll be a risk to you moving to 70% also?
See, I don't think there should be any risk to the FY27 targets because the reason for which the FY25-26 got rolled back was at the start of the year there was a capacity shortfall, and that was the basis of the industry getting leeway from the government to postpone the targets. At present, the situation of India is that we have ample capacity to meet the 40% targets. The capacity which is already approved by FSSAI and which is under already approvals. If you take the total number, we are on way to reach the 40% capacity number of the demand of the market. So
Got it.
there's the grounds for them right now to change any regulatory.
Okay, all right. Yash, and you believe that the realizations as well have bottomed out, which were under pressure?
Realizations really depend on the raw material prices, Nigel. What happens is our finished goods prices are a cost plus to the raw material prices. Now, since the demand of recycled content crashed, the raw material prices has also crashed as well, which obviously led to lower realizations. So for us, it's like a cost plus mechanism for the finished products.
Okay, Yash, final question before we let you go. You used to do an EBITDA of around 50-55 crores. That came down to around 20-25 crores. Now we have seen an improvement on a sequential basis. That's why the street is excited. Do you believe the EBITDA margin and the EBITDA number in Q4 will be better than Q3? And do you see an improving trajectory from here on? And you had put money as well at around 1,035 rupees. What do you have to say to your shareholders? The stock has come down by nearly around a third from the top.
So Nigel, yes, our EBITDAs are improving. This quarter, we've done an EBITDA console level at 30.73 crores, and definitely we are expecting improvement in the overall performance in the coming quarter as well, albeit a marginal one probably in this quarter we're expecting. But going forward, definitely as the subsidiary businesses ramp up and the utilizations improve to around 85 to 90% levels, we'll definitely see a big jump in the overall financial performances, which we are very, very, hopeful for in the coming in FY27. Now coming to the, valuation and yes, the promoter had, infused about 150 crores on warrants in January 2024 at a price of 1,035, which was, the SEBI price mechanism at the time. We think that after that, a lot of value creation has happened in the organizations. We have created massive capacity to supply RPET to the industry, filament yarns. We have created a very strong brand in the country, which has been very, very successful till so far in the industry to cater to the regulatory demand, which is going to come up, if not today, tomorrow. And I think there has been a lot of value creation, just that we are waiting for that market to be created to encash that value. So I definitely think that there's going to be a massive value creation going forward.
And all those warrants have got converted, right?
Yes, that's correct.
Okay, all right. Thanks a lot for joining in, Yash. We'll have to watch delivery because, the last quarter was a little better than the previous one. But as you're saying that things should improve from here on, we'll have to track that on that front. Appreciate you joining in and giving us all of those details.